Hey Bryce, what did you get your mum for Mother's Day?
Mate, to be honest, I just sent her a text message.
Oh, no.
Yeah.
That's terrible, man. Well, you know what you should have done? You should have done what I did. You should have gone on to equitymates.com/stake, signed up, and got your mum some shares.
What are you talking about? You can't go and buy your mum's shares.
Yeah, mate. With stake, you can gift shares to other people.
Mate, that's not bad. So how does that happen?
So all you have to do, go to equitymates.com/stake, sign up through our website, get yourself a free $25 when you fund your account, and then you can go on and buy shares for other people. So I bought my mum a nice little parcel of Apple shares for Mother's Day.
Nice, an apple pie.
Yeah. I've been on them for a while about starting investing, and I thought, you know what? Why don't I just take it into my own hands and get them started? So you can do that too.
That's actually probably one of the coolest presents I've heard about, Ren. So all I need to do is head to equitymates.com/stake. I'll sign up to an account and then fund it. And then they're going to give me free brokerage on any transaction in the US and $25 into my account. And then I can send Apple or Amazon or any stock in the US to my mum for next Mother's Day. So that's going to be better than sending a text message.
Mate, if I hear about you sending a text to the lovely Anne next Mother's Day, I'll be having a stern word with you.
Mate, I'll make sure I sign up to stake before that happens.
That's what I like to hear.
Nice. That's equitymates.com/stake for free brokerage, $25 into your account.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in 15 minutes or less. We break down the world of investing from beginning to dividends so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity buddy, grammar Nazi, Ren.
I'm good, Bryce, I'm good. For our listeners out there, we have recorded an episode and we did it in one take, but somehow this intro is now onto its third take.
We're pretty excited about this one. We've been lucky enough to sit down with BetaShares, who is the largest Australian provider of ETFs, or exchange-traded funds. Now, over the last 3 months or so, we've had a number of our listeners write in and ask us if we can specifically do some episodes and break down ETFs, or exchange-traded funds, as I said. So we thought, why not take the opportunity and sit down with none other than a company that specializes purely in creating exchange-traded funds. So we went and sat down with BetaShares and with one of their founders, a guy by the name of Ilan. So Ilan is the head of strategy and marketing at BetaShares, and he's had a pretty interesting career leading up to this.
Yeah, so this first episode is about BetaShares, the company, and about Ilan and their growth story to this point. We touch on ETFs a little bit, but next episode will be ETFs 101. Just a whole episode sitting down with Ilan dedicated to what do we need to know about ETFs, how do we understand and think about ETFs, what are the risks and rewards of ETFs. So between this episode and the next one with Ilan, and then our third episode with Adam, you should get everything you need to know about ETFs. So today we're here with Ilan from BetaShares. Thanks for joining us today.
Great to be here with you guys.
So I guess to start things off, settle a bet for us. Yeah. Is it BetaShares or is it BetaShares?
Can be whatever you want it to be. But I think it's BetaShares.
BetaShares.
There's a concept in finance of alpha and beta.
Yep.
Alpha is essentially trying to beat a benchmark, and beta is essentially providing that return. So we call ourselves BetaShares. That's what it's all about.
Great. So to kick us off today, can you tell us a bit about your personal background and how you got to where you are here at BetaShares?
Sure, thanks for the correct pronunciation. So going back to the very beginning, I did a law degree, a commerce law degree at the University of New South Wales, but I've always been quite entrepreneurial. I mean, thinking back to the early years, even at school, we started up, my friends and I started up, we were doing DJing for kids' parties. And then, during these uni years, I started up a terribly named mobile cocktail bartending business called Cocktail Magic. So I've always sort of been out there, sort of trying to build things and do things on my own right. So, but actually, when I finished uni, I got involved in the venture capital industry. And I actually started what was one of Australia's first venture capital funds. But this was a long time ago. And back then we were investing in things like online pet food, which now is just a brilliant idea. Back then it was an okay idea. So it was kind of we were really a bit ahead of our time. So we made some pretty good investments and some pretty bad investments, but still it was a good experience sort of going through the process and actually setting up a business and raising the money for a fund. And then after that, I actually did go into management consulting. I worked for a great company called the Boston Consulting Group, and that was a great experience for me because basically what you do in companies like that is you spend time working for CEOs on top-level strategy. And so you are just experiencing a whole lot of very, very fast-moving environment with very smart people and solving difficult problems, and really just giving yourself the confidence, or giving myself the confidence to go out and start doing things myself. So I did that for 5.5 years in Sydney and New York. But I had an itch to get back and do something entrepreneurial. And so I had a couple of friends back from the uni days that I reconnected with. And basically we decided to work together to look at starting businesses. And so that's how it all started. And so, we were involved in the funds business, the funds management industry for some time. The traditional, as you call it, managed funds business. So there was a business that when I got started working with these guys, they were at the tail end of. And we were thinking about ETFs. We had heard of ETFs before, which we'll obviously discuss what those are. But for a variety of reasons, the timing wasn't right. But then a few things changed in the market, which made the timing very right. And so those are things like the global financial crisis, the rise of the self-managed super fund industry, and the global financial crisis. Why that was relevant is because people started really scrutinizing how their money was being managed and started really looking at things like fees. Mm-hmm. The self-managed super fund industry grew, and that was really useful because people were starting to take control of their investments. And finally, in the financial advisor world, there was something called FOFA, which was a particular act that came into Parliament called the Future of Financial Advice, which meant that as an advisor, you could no longer get paid a commission by a product manufacturer. And so when that came in, that gave ETFs a level playing field to other funds, and for those three reasons, we thought to ourselves, it's now time to start this business. And we started up BetaShares, which we'll discuss what it's all about. But at BetaShares, I am responsible for corporate strategy, which is really things like which products we should launch and why. I'm also responsible for sort of general growth strategies like international expansion, and also I'm responsible for marketing. So I head up our marketing team, which amongst other things is interested to make sure that the younger generation are interested in our products, and we think that's been great, and that's why we get very excited by talking to people like you, because you are doing your best to educate the market and the younger market on why you should actually pay attention to your investments and start generating wealth from a young age. Mm-hmm. So that's a bit of a nutshell about what I'm all about.
Very interesting. Resonates pretty well in some regard, the entrepreneurial side too. Ren and I mean, we took off a weekend a couple of months ago to go and sit in the house and try and think of business ideas. Yeah. Haven't come up with anything like BetaShares yet, but
we'll get there.
So yeah, it's good to hear. So let's get on to BetaShares. Yeah. I think I first heard about ETFs or exchange traded funds just before uni, 2010-ish, and didn't really know what they were. Took a while to get an understanding, and then it became quite a buzzword. Yeah. So, firstly, can you give a bit of an idea of what BetaShares does, and then we'll get into what an exchange traded fund is.
Sure. So, BetaShares is a specialist fund manager that specializes in exchange traded funds or ETFs. And I have to sort of slightly describe what ETFs now, because otherwise it doesn't make sense. But basically, they're one of the fastest growing and, in my opinion, one of the most exciting investment products in the world today. They're investment funds that you buy and sell on a stock exchange. So in many respects, they're an investment fund like many people would understand, but you buy and sell them on the stock exchange, for one. And they're bought and sold like any share as a result of that. And they often give you exposure to an index or an asset class in a very cost-efficient way. I think the best way to describe it is to give an example.
Yes.
So if I'm looking at buying a tech company right now, I might try to decide to buy between Google, Facebook, or Amazon. I'll scratch my head. I'll have to make a decision. It's quite hard to make that decision. If you think about an ETF that invests in, let's say, the NASDAQ 100 index, so the NASDAQ 100 index is the largest 100 companies on the NASDAQ exchange, and many companies on the NASDAQ exchange are tech companies. Yeah. Therefore, buying an ETF that tracks the NASDAQ 100, we have one called NDQ, buying that fund will give you exposure to all the companies in the NASDAQ 100 in a single trade. So therefore, an investor will in one single trade get exposure to Amazon, Facebook, Google, and all the other 97 companies that are part of the NASDAQ. And another example would be, I really want to get exposure to gold. Now, how do I do that before ETFs? Well, I'm going to try and find a gold broker. I'm going to have to worry where I'm going to store it. Now I can buy an ETF. We've got one called QAU. AU is as you know, the periodic table code for gold. So you can buy QAU and in one trade get exposure to gold without having to worry about physically buying it. So they're usually cost efficient. They're bought and sold on the exchange, and they're often, in all cases, you know exactly what's in them. So it's transparent as well.
So just for beginners, when you say you get exposure to them, is it equal exposure to every single stock, or do I know what exposure I'm getting?
So it all depends on the strategy of the ETF. So there's around 220 ETFs now in Australia.
Okay.
But if we just start with a simple example, typically it would be the same as what the index does. So let's say the S&P index or the NASDAQ 100 index, they will, for example, use what's known as market cap weighting. So the largest companies by market cap will be the largest weights. As an investor, you get exposure to the proportion by which those companies take up of the index. So it's not necessarily an equal weighting, it's the way, in that particular case, it's market cap weighting. So that would be the way I describe it. Nice. And so just back to BetaShares. So BetaShares is an exchange-traded fund manager. We now know what an ETF is. And we are, the reason why we're a little bit different, we're a specialist, we're born and bred Australian business.
Yeah.
And we actually now have the largest range of ETFs on the market. We've got 45 funds currently trading, and also the largest team. We're currently managing $5.5 billion.
Wow. So for our listeners, we're going to do a whole separate episode on ETFs and, the deep dive into exactly what they are, exactly what they can do for you, and some of the risks. So focusing on BetaShares as a company, so you're a co-founder of the company. Can you talk about what it was like founding a funds management company in a new space in ETFs, and what it was like, trying to raise money for this new sort of style of investing in Australia?
Yeah. I have massive respect for anybody that starts a business of any sort. It's one of the hardest, most complicated and challenging things you'll ever do in your life. And it doesn't matter whether that business is a tiny online eBay store or a baby food company or an ETF business. Essentially, I've got massive respect for that. So what it's like funding any business of any sort is a challenge. It's an all-body experience, but it's quite a fun experience. And the most important thing I think about it is knowing who you are and knowing what you do. So we'll get a little bit philosophical here for a minute. I think ultimately, you need to be able to look yourself and your partners in the eye and know that you are happy and comfortable with not knowing where your next paycheck's going to come from. If you are not going to be able to do that, then you probably shouldn't be doing it in the first place. I think that's really important. So you need to be able to motivate yourself entirely independently, and you need to be able to be comfortable with that level of risk. So that's one of the hardest things about co-founding a company. Now, one of the best things we did at BetaShares is we took the time, as you just mentioned you did, but it took a bit longer than one weekend. We took 18 months, basically, of pure scrutiny of what we were going to do. So we started, we looked at ideas, we went to the next step, but we didn't launch. We looked at another idea, we went to the next step, and we didn't launch. And that was 18 months or maybe longer, of really carefully thinking about our environment, what was going to be the next big thing. And finally, when we decided to launch hard. I mean, that was very important, I think, in terms of, to the extent we've had any success, and we've got a long way before we can call ourselves a success, I think to the extent we've had any success, that's one of the things we did best. But you're right. Starting a business in the financial services space does require a bit of extra oomph because you're playing with people's money and it's complicated. And so it was hard. We were lucky that we had some track record of being in the space, but it was a new space, and many people, when it came to wanting to invest in the company, said no. And the main thing they were saying is, how are you going to actually get people to invest in these things in the first place? What we had known is that there's this huge market called the US of A that has really proven that you can do it. And so we were very confident, and eventually we got there. So yeah, that's kind of
nice. So when did BetaShares start?
Yeah, so we started looking at it about 2 years before we started. So we started, the first funds launched on the ASX at the very end of 2010. So it's been sort of just over 7 years of live, and probably another 2 years before that of thinking.
Wow.
But I think, as I said, any company starts difficult, and particularly one where you manage people's money. So I think the hardest thing about starting a company in the financial services space, or really the wealth management space, is that you have to earn people's trust, and you've got to build a brand.
Yeah.
And that is something that's really hard. And the third thing about starting a business in this area is that you have to spend, unfortunately, quite a lot of money.
Yeah.
It's not an online business. There is tax advice you need to get, accounting advice. There's a lot of upfront cost that you need before you can get things going. But ultimately, the hardest thing of all is finding the right people. And so the hardest thing we've found in the whole business so far, and we're really, really fortunate that we do have such a great team, is finding the right people. And we're proud of what we built in that respect. But that's something else that just I think is not unique to us. It's pretty much in every business.
So did you have one ETF when you started out, or did you launch with a range?
A good question. We started with two.
Okay.
We started with one over the resources. They're both still on the stock exchange. We started with one that invests in companies, the largest companies in the financial sector, basically the big banks, Macquarie Bank, ASX, and the like, and some insurance companies. That's called QFN. And then we launched one called QRE, which is a resources sector ETF. The same thing, the largest companies in Australia in the resources sector. Of course, that's BHP, Rio, Woodside, Fortescue Metals, etc.
So that's an interesting decision, because when you talk about ETFs, a lot of the ETFs are just the biggest, 100 or 200 companies in an index. So why did you make the decision to do sector-based ETFs rather than just biggest or by market cap?
We weren't the first in the market. There were other people doing ETFs before us, and they happened to be very large and as a startup, very scary competitors. And so we did not want to launch funds that were exactly the same as theirs. We wanted to be differentiated by the products we launched and by the style of our business. At that time, there was no resources and financial sector ETFs. They're big sectors in the market. It's a great way to play that theme, so we launched those.
So you've got 45 now, you said?
Yeah.
Do you have a goal in mind of what BetaShares looks like 10 years down the track? And how do you determine what's the next product without giving away trade secrets?
Yeah. All right. So in terms of what BetaShares is going to look like, we do think there's a lot more funds that we can launch. There is 45 funds. You'd say that's a lot. But in the US, I think I'm going to get this wrong, there might be 5,000 ETFs.
Whoa.
So there's more that can be done. It's all about slicing and dicing the market in different ways. It might be about a different type of strategy. So there will be more funds to come. I'm not sure that we'll continue to launch the number of funds at the pace we have been. The market's starting to get a little bit more mature. But we'll launch more funds. We'll certainly have, in 10 years, we'll certainly have double or triple the amount of funds under management. And I think we'll be one of the largest fund managers in Australia. In terms of, the other question was about how do we think about what's going to come next? Yeah, a number of things. One, we look at the market. What does there need to be? This is the value of being Australian. I'm sure we'll get to that. So we look at what the Australian market needs and is looking for, and we devise products accordingly. We see what's happening in developed markets like the US. We speak to our sales team. We read, these types of things. It's quite a complicated process, I can imagine.
I can imagine.
Yeah. So you touched on your big competitors before. You have $5 billion in assets under management. Some of your competitors play in the trillions of dollars.
Yeah.
What was it like competing against, the BlackRocks and the State Streets of the world? Did they take notice of this Australian competitor early on?
No. I would say that in the early days, they didn't take that much notice of us. They probably wouldn't have thought we were going to be a major threat to them, if I'm honest. They would have known that we had a bit of a background in the space, so to that extent, they would have taken notice. But broadly speaking, they wouldn't have been too concerned, I would have thought. That's not the case anymore.
Yeah.
I think they certainly are taking notice now. And I think, as I said to you before, what we had to do, by definition, was to differentiate ourselves based upon the products we launched, based upon the style of which we do business, things like the speed of our decision-making, and capitalising the fact that we're Australian. So I think where we differentiated ourselves in the quality of our team, the fact that we now have the largest team. So we've invested heavily in this market because we are only Australian. So what they don't have that we have is a complete focus on this market. They may not necessarily have their very best teams in Australia because their very best teams may want to go to New York City or Boston or London. Our whole team is here and we completely focus on the market here. Yeah.
Well, that probably flows into that next question. You make it very clear that you're an Australian ETF provider, and so we kind of sat back and said, does it really matter that it's an Australian company. What does it really matter for the people buying the ETF? So does it really matter?
We think it matters a great deal.
Yeah.
And we think it matters a great deal for the reasons I've already described. I think it allows particularly, let's start at the first level, product side. I guess being an Australian born and bred business, we are much more attuned to the needs and desires of Australian investors. So every product we launch is specifically designed with the Australian investor in mind. That is not the case with our competitors. In many cases, they have exported funds they've created in the US and brought them to Australia, which is absolutely fine, but in certain cases, that doesn't give you the exact thing that you might want as an Australian. I'll give you an example. We were the first to launch a gold fund that was currency hedged. Now, let's not get too detailed as to sort of finance terms, but why did we do that? There was already a gold ETF that was unhedged, which means that you're essentially buying in the US dollar. Now, the problem with that is that if we look back in history, which you would not do if you're not an Australian manufacturer of product, is that as gold goes up, so too has the Aussie dollar gone up in history because it's a commodity country. Now, the problem with that is if gold goes up at the same rate as Aussie dollar goes up, you may find yourself in a situation where gold has gone up 10%, the Aussie dollar has gone up 10%, meaning you're currently at 0%. Yeah. So we did a currency hedge fund as a way to give Australian investors what they really need, which is a exposure to the gold price. So now if the gold price goes up 10%, doesn't matter what's happened to the US dollar and the Aussie dollar, you'll get essentially 10%, excluding any fee reduction.
So I guess the natural question that follows from that is, how is the Australian ETF investor different to the American or British ETF investor?
Yeah, it's a good question. There'll be a lot of similarities, but there are things that are different here. I mean, for example, we've got this concept of franking credits, right?
Yeah.
So Australian investors may be really focused on that component because that doesn't exist in the US or the UK. I think there's a level of cynicism, perhaps in Australia, around certain investments, in a way. Probably I would say there's more similarities and differences, but it's the little detail that matter. Yeah. The little details that matter. The way you think about as I said, the taxes, the franking credits, these are where things are different. And the useful thing about the US market is we can almost go to the US and look at it as basically like a Marty McFly, Back to the Future. You're too young for that, but it's essentially Back to the Future is like a movie where this Michael J. Fox went back in time, but basically you feel a bit like that when you go to the US because you can actually see what's coming. Yeah. So we use that as a great example. Yeah. But there's definitely differences, and also when it comes to the advice market, that's very different. Yeah. We've got a very particular style of financial advisor. We've got a particular style of stockbroker that doesn't necessarily exist, and so of course, as you'd appreciate, a number of our investors come via those particular intermediary channels, being advisors and stockbrokers.
Well, we've covered most of the history of BetaShares and yourself.
Yeah.
And so before we crack into the next episode and discuss ETFs 101, we thought we'd have a bit of a fun game.
Right.
And you're obviously an expert in ETFs. So what we've decided to do is we've come up with a list of obscure ETF names.
ETF names, right?
Yes.
We'll give you a brief description, and what we want to know is, are they true or false?
Okay.
Do they actually exist?
Right.
This is not just Australia, obviously.
No.
I'll probably show myself up as a real ETF nerd, by the way. I almost don't want to get this right.
Yeah. Just throw the game.
There's no, see, when I say that, there's no way I can lose.
Exactly.
All right, well, I'll kick it off. So, true or false? An obesity ETF. Code SLIM, S-L-I-M. And what it does, it holds companies that service obese people and companies that help people lose weight.
I'd say that's true.
Yeah, no, it is true.
Yeah, that's probably a little too niche for Australia.
Yeah.
Right?
Okay, true or false? Global Millennials ETF, code MILN, holds companies that service millennials.
Sadly, it's true as well. Not sadly, it's actually quite a good idea. And we know the guys who do that fund. They're called Global X.
Oh, there you go.
That is true. Yes.
Okay. What about this? Tax Cuts ETF, code TAX, tax. An ETF created after the Trump tax cuts and focusing on holding companies that will benefit most.
That's false.
That is false.
But it's a good idea. And funnily enough, there are funds like that out there. So that, interestingly enough, in the US, there has been a launch of There's a Republican ETF. So actually there is, it's funny you should say that. Like you got, it's sort of almost your game almost got too clever for its own self. There is a fund or two out there that, for example, invest in companies that are going to be benefiting from a Republican
Really?
majority,
Okay.
and is a Republican Party ETF. Amazingly enough.
Wow.
Yeah. But tax cuts not.
Yeah.
Great code though.
We should say if you use any of these ideas, we want to cut.
Sounds good.
High volatility ETF, code HVOL, holds 200 of the most volatile stocks.
Wow. That sounds like what a lot of investors do in their daily life. It's definitely false, I think. Is it?
We've got down true.
Wow. Wow. So this is for somebody who wants a whole lot of volatility in their life. Wow, those guys
I don't know
fun.
why would you would want that, but
Wow. Okay, there we go.
Maybe a very niche part of your portfolio, you know?
Yeah, wow, okay. Because obviously low volatility is all the rage.
Yeah.
exactly.
All right, what about the Buzz Sentiment ETF, code BUZ? Holds companies that get the most buzz on social media.
I'd say it's true.
It is true.
And frankly, probably a decent idea if we think about it.
Yeah, well, we were confused by this one because what if you're trending on Twitter for a really bad reason? Like, how do you make that determination?
Buzz is buzz.
Yeah, I guess.
I would think maybe they might have a positive buzz and a negative buzz.
Yeah.
All right, well, we'll wrap up with this one. Tobacco Companies ETF, code SMK, holds the world's largest tobacco companies.
So we've got one of the leading ranges of sustainable, responsible investing ETFs. So that's not something we would be launching anytime soon. This is the tough one. I'm going to go with false.
Correct.
Because I just think
You wouldn't want to do it.
that's not something you'd want to do.
Yeah.
But there is, again, just to play, be once again the ETF nerd that I am, there is a fund called SIN, S-I-N. And that essentially is the opposite of like a Karma style fund, because there's one called Karma too. It's the opposite of Karma, it's Sin. So this is investing in tobacco, pornography.
Oh, wow.
Yeah. Everything that's bad.
Wow.
And it turns out that it's actually performing quite well.
Yeah.
There's a lot about the world.
All right, well, I think you've well and truly proven that you know your ETFs. And we look forward to getting a cut for SMK.
Good stuff.
We'll wrap this one up, Ilan. We've had a good introduction into yourself, great introduction into BetaShares, and we'll jump into ETFs 101.
Sounds good.
Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks, and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested-related content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. We hate spam. It's once a week, and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.